Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room. I want to see if I can play for you a video that we presented at the money market at the virtual money show last week. Let me see if I can get the sound going. I think we're having some technical difficulties this morning here, so let me come back here to the market, which is trading pretty strongly here. And gold up $16 at $1854.80. Silver is at $27.68.50. Let's watch the market here for a little bit and let the energy resolve itself here up here. But we're getting some pretty much aberrations here with rumors about Bitcoin. I think Musk has liquidated, Tesla has liquidated some of the GBTC assets that they have. So the market is a little bit in disarray this morning. So let's allow the market to adjust itself here and watch it for a little bit. Okay, let's come back here. I seem to having a bit of difficulty here with the sound this morning. So let's focus on the market here for today, and let's take a look at what's going on here with gold. There is a number of comments made by Tesla that they have liquidated, I believe, a portion of their assets in GBTC. So it's throwing the market a little bit out of whack here, and it's I think ridiculous that one company or one man can have such an impact in the market. So let's move on to the gold market here. The structure for today is the average price pretty much has been identified as 1837. The extreme level above that average price for the day is 1854. The sell-to level is 1865. The extreme level below the mean is 1826, as you see on the left of the chart. And the buy-to level is 1809. Now, these are the pivot points for the daily structure, which are embedded in the code of the VCPMI, which is written in C++. Now, on the right of the chart, you're looking at the weekly target of 1858 to the sell to 1872. The weekly average is 1833, and the buy one below that is 1819, and the buy two is 1795. As you can see, the market has completed the monthly target of 1850. It has completed the sell one level of 1854. As we speak, it's completing that level with a high of 1857. So the position is neutral for day trading. It has completed the targets of the extreme above the mean. On the daily, as the market came down early, or on the 14th, it traded right around 1837. And one of the things that I want to point out to you here is that at 1837, it was pretty much aligned almost harmonically with the weekly target, the weekly average of 1833. So once the weekly average got up above 1833 and above 1837, it brought in the daily and the weekly bullish price momentum. And automatically the targets above were activated. And in this case, it embraced the monthly target of 1850, the sell one level of 1854, which is where we are right now. And above that, you're looking at the weekly 1858 that would complete the pattern on this weekly buy signal that we're looking at, or buy trigger. Now, what I emphasize to my traders in the private trading room is how important this relationship, when you are able to identify the harmonic relationship, which is really the integration of the daily, weekly, monthly signals. And the algorithm identifies or transforms these pivot points into a color that gives them a mathematical probability. And what it's saying right here is that even though the price has reached this level of 1854, it has the potential to reach 1858, 1865, and all the way up to 1872. The difference is that mathematically, the probabilities now are very low for the price to, or I should say, it's entering an extremely overbought condition in most technical terms. And I think the question that the market is trying to define right now is whether the buyers that are coming in here are stronger than the supply that potentially could be offered at these levels, which is what the AI identifies mathematically. When in red, you're looking at a high probability, and the AI is pretty much warning you now that if there is going to be a reversion unfolding, where you're going to get supply to come into the market, is going to be from these levels. And that also applies for the silver market. The same systematic move took place in silver here as it completed the target of 2777. And it activated pretty much a bearish trigger, a short trigger, by trading below 2777 at about 4:15 a.m. this morning. And it is in a short mode. Now it's come down from 73 all the way down to 52. So this is where you use, or you begin to use, a trailing stop. So that if we see this kind of a move reversal up, then at least you can lock in a profit or break even. Or you can choose to use the level of 2777 and on the close, if you want to carry the position to the target below 2744, which is really what's activating right now. The gold market seems to be a little stronger this morning, and the silver seems to be lagging a little bit here. The next target in gold is 1854. I'm sorry, 1864. The gold market seems to be leading the way this morning. We got fast market conditions here. $18.58 has been completed. The sell one weekly target has been completed. The next level that you see above is 18.65. These are targets that you can use if you're long into the market and you want to use it as a GPS to guide your core position, your trading. It's pretty much confirming the targets are being completed. Now, the question is it going to go up all the way to 1872? So let's just continue to watch the volatility of the market and continue to manage your position, given the opportunity that it's giving you up here, where you can pretty much lock in your balances, reduce your risk, synthesize, take some profits. We seem to be getting a pretty broad move here. $60.60 traded here, up $22.50 on gold, and we got the silver through back up above 77 at 83. Pretty strong day, completing targets into the distribution area of supply. when you're getting this again, this broad move into this area here, obviously the momentum is unfolding into the targets designated, and what we want to see is the market, how the market is going to react when it gets to these levels. And then here, what it's doing is basically there are more buyers than sellers coming in. But it is entering an overbought condition, extremely overbought, as it moves into the relationship of the daily, the weekly, and the monthlies. If there is going to be supply coming into the market, ladies and gentlemen, it will be from these levels. Or if the demand that's coming in here is greater than the supply that's being offered right here, the price obviously is being reflected in the higher price. So we're exchanging here a lot of supply and demand. I don't see a lot of volume up here. In fact, I think we're looking at maybe the open interest declining up here. So I think this could be pretty much a short covering rally, liquidating a lot of short positions that are being, taken out. $18.61, 20 on gold, 27.85 on silver, still trading into this area here, which is extremely overbought. And I'm checking to see if some of my limits up here have been filled. I'm trying to lock in some balances here on some positions that I have, which have given me the opportunity to take some out here at these levels. Coin got hit pretty hard this morning with Musk's news about commenting about GBTC being liquidated, or Tesla liquidating some of their Bitcoin holdings. But it's come back here from the lows made early this morning. More buyers coming in here, so it looks like the market is supported up here. Silver is into the zone between the sell 1 sell 2 level, and 2802 is the next target for silver. $16, 1860, 61 trading still in gold, 86, 85 trading in silver. So there's a lot of trading going on up here, and I am watching very carefully because the AI suggests to if there's going to be selling again, it's going to be from these levels, particularly now that we're entering the daily, weekly, and monthlies resistance levels, you might say, or distribution area of supply. This is where a lot of the surprises come in, where you get all of a sudden this tremendous sell-off of supply pretty much coming into the market. It's at the extreme above the daily, weekly, and monthly means. The news, obviously, the fundamental news that we're dealing with right now are pretty much the same. The same. It hasn't changed with regards to the stimulus, and President Biden is getting criticized quite a bit here for the amount of stimulus that they are aggressively want to commit to the market here at these levels. And we're beginning to see just an explosion of prices pretty much across the board here as we are entering into this economy, which is really flooded with cash. But as I said earlier last year, when we entered into this crisis here, that part of the problem is that when the supply chain was broken, that we could be facing this potential, you might say, velocity of money that's going to come into the system in a short supply with a lot of demand for product, but in short supply. The pandemic basically reduced the production factors, you might say, that balance the supply and demand equation. And I think we're just beginning to catch up with that deficit that we had in production as a consequence of the pandemic. And it's going to be, I think, a little bit of a window of time before we begin to catch up for production to meet the kind of demand that we're looking at right now, which seems to be at record levels, entering once again this new economy. So we have a lot of calibration going on in the marketplace here with regards to values, and in particular, I think we're looking at the reality that all of this stimulus that's coming into the market does not bode well for the U.S. dollar. And I think the smart money began to see this last year when the Fed basically committed to the production of U.S. dollars with unlimited quantities. They agreed to open the printing presses with no limits, and that pretty much was the door, I believe, to what we saw here, which is that obviously the stock market or the markets are going to be supported by the government, so there's no worries about price coming down, falling down, except in gold, except in silver, which is really real money. And if you take a look at the prices of commodities, they're exploding, across the board pretty much, except for gold and silver. And so we have this anomaly between the actual cash market, which is showing tightness of supply, particularly in silver. And, we have the gold and silver on a negative in comparison to all the commodity prices that are beginning to explode. It just doesn't make sense. And so this is a pretty good example of what I say about the gold market pretty much trading on its own internal technicals, not the fundamentals. Eventually, the gold market would react to all of these fundamentals, but most of the people will not be in it. Most of us will miss it because the gold market will go when it will frustrate you to no end. You give up. That's when it will go. The question is, are we breaking out in gold from here? And, so far we're looking at prices at 1860. The breakout point, I believe, is 1880. And if we look at 1858 was the sell one weekly, and 65 is the next target, all the way up to 72. This levels here, the higher that they go into this targets, the bigger the reversion is going to be. And that's what the market, that's pretty much what the extension is. When you get into this targets, particularly harmonically, it's a high probability that the market is going to adjust the prices up here as it is overbought. Even though it may confirm it on a close above 1872, the higher it goes, the higher the probability that it will revert. $28.02 is the target that the silver is targeting now. The high last week was at 28.02 is the sell one. The weekly sell one is 28.09. So these are the targets. These are the targets that we're looking at. $18.63 new high in gold. 65 is the sell two target. You're looking at a pretty broad move on the derivative side in gold mining shares. $27.98, $98.50 trading in the silver market here. Making new high here almost on gold again, 62.90. $65 is the target. The daily target is 65. That 63 seems to be solid resistance on gold here, 61.80 trading last. If we come down below 1858, it's going to activate a weekly short trigger. This is where the reversion confirmation comes in, where the AI identifies for you the trigger points. A close below 1858 will activate a weekly short trigger. Very, very strong, I would say, resistance. If we're taking a look in silver, for example, on the daily chart, you're getting kind of a mixed picture here. You're getting kind of a bearish, a bear flag, which is breaking out, which is bullish. And you're getting into the target of 2809, which is the weekly, 2802, 2777, and all the way up to 2866. But 2802 and 2809, you're looking at this harmonic relationship here that indicates that this is a very, very strong area of resistance. And so let's watch the market and see how it deals with this resistance. If there is enough buying that is going to take this out and essentially activate the 2866 target above, which is really the next target, as the weekly signal has been activated by the market coming down into this level here. It actually activated this levels, this B2 level here at 2710, and now we're looking at the extreme above this level here being completed, 2802. Fast market on silver now, 2805. It's trading above the sell to level daily, so it is putting the daily neutral, and we should be moving into the weekly target of 2809. Gold making new highs. It looks like coin has made a bottom as well. GBTC is struggling here a little bit into a very extremely oversold condition. What we use to start identifying the short triggers in the market here is the daily numbers. So we begin to see right away how the market is behaving on the daily numbers. From now, obviously 2802, which is the daily sell to level, and if we close below 2802, it's going to start bringing in the short triggers on the daily. And this is the closest, you might say, trigger that we look at in terms of identifying the reversion beginning to unfold. Twenty-eight, 07, 08, trade it. 08, trade it. 2809 trading 63, 64 in gold. So we're stabbing into this larger targets here, which are completing. It just completed a 2809 weekly target in gold. And the next target is 2866. If we get through this 2809 and close above it, then we're looking at 2866 for the silver. To the traders in my trading room here, if you apply the hedge that we basically put on, we are holding that hedge. Please hold on to it. Allow for the market to trade whatever it needs to do up here. You have long core. You have a long core position that should begin to pick up quite a bit of equity as this market is moving up here. If you've been following us for the last few, at least videos here, we've been anticipating the market reaching these levels up here, and obviously it's giving you the opportunity to lock in some of the profits accordingly here. And so, but I would say to you that once again, the VCPMI at this point is in a very high probability area where we could see a reversion to unfold from these levels. And that essentially means that if there's an area where we can see supply coming in, it's going to be from these levels here. So you want to keep that in mind and use this rally for you to lock in profits, for you to hedge your position, and for you to basically reduce your risk up here, and allow for the market, to expand on its pretty much internals, as opposed to you buying into what appears to be an extremely overbought condition. If you didn't buy it at the 1700s, or buying up here could be a very, very dangerous proposition. So I just want to alert to those viewers that are watching to take that into consideration up here. The market is extremely overbought, but if you've been following it and you have long positions that you're taking, this is the time to be reducing your risk, to be locking in some profits. Thank you once again for the opportunity to share this with you here, and I wish you good luck, my friends. I'll talk to you next time. Take care.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.